Ladies, gentlemen, hey, this is Mike Price, president of LTI Mortgage. And in this video, what I've done here is I wanted to educate you guys or show you how a home equity loan can help you get out from under extreme credit card debt or any other liabilities that you have out there, possibly student loans or anything that you need to pay off that's costing you a lot of extra money per month. And so what I've done here is I have created a scenario with a fictitious client. His name is Johnny. I call him Mr. Johnny Cash Out. And before I get into it, obviously I need to take care of some compliance stuff. Your actual rate and payment and cost could be higher. Get an official loan estimate before choosing a loan. So I wanted to put that information out there while I'm doing that. Okay, so now that we've got the compliance stuff out of the way, let's talk about this deal and what we're doing for Mr. Cash Out here. All right, so everybody knows that, hey, home values have gone up quite a bit here in the past over the past year, and you're sitting on a ton of equity if you own a house, so you may as well take advantage of it. All right, so what we're doing here for Mr. Johnny Cash Out here is he has a mortgage balance right now of $266,000. His home value is $300,000. Now he has credit card debt. All right, so he's spending $1,000 a month to pay the minimum payment on his credit card debts. His interest rate is 4.125%, and his total payout, meaning mortgage and credit cards, are sitting at $33.66 a month. So I'm going to jump over here and run down his payments. All right, he's got a principal and interest payment of $14.53. Property taxes sitting at about $600 a month. Insurance are right around $150. And his total mortgage payment itself is $2,300, which isn't that bad. But you also have to account for the $1,000 a month that he is spending on the credit cards. Okay, so he is spending $33.66.45. We got that number right there. And so I want to show you how a simple home equity loan, not a home equity line of credit, a home equity loan. Home equity line of credit is nothing but another credit card disguised as a loan. You're taking out a card to pay off debt at the end of the day with that option. All right, so in this scenario, he's spending that $3,300 a month, and he's got 24 years left. He's been in his house right at 6 years. All right, so what we're going to do for Mr. Cash Out here, we give him a loan amount of $303,000. All right, with an interest rate of 2.99, a 30-year loan. His new payment is $2,025 a month. That gives him a savings of $1,340.62. Now he no longer has credit cards with this payment, so that $1,000 is gone, which we show because I mean he's saving the $1,340 a month. Now right off the bat, this is an awesome deal. Who does not want to save $1,000 a month with a refinance? Everybody out there that I know wants to do that. Okay, now with that being said, the number one complaint that we get from most people is, hey, I've already been in my house for 6 years. I don't want to go backwards. Okay, if I do this loan, it's going to take me 30 years. Hey, we've got a solution for that. So just say, okay, we want to do a 25-year or maybe even a 24-year if we needed to. But in this specific scenario, I'm going to give Mr. Johnny here same exact cash out, right? Or the same exact loan amount. We got 2.99%. Now, instead of a 30-year term, we got a 25-year term. He's not going back very far. He's still going to pay it off in 25 years versus 24 years. Not that big of a deal, especially when we tell him, hey, instead of you saving $13.40 a month, you're now going to save $11.80. Big deal. He's happy. Everybody's happy. Credit card's gone. Wife's happy. All that good stuff. All right. Now, once we get with Mr. Johnny and we tell him, hey, there's an even better way that we can structure this deal. Remember, you told us, hey, you didn't want to go back. Clearly, you're comfortable making these payments at $33.66. It sucks, but yeah, you're making them on time. Everything's paid on time. So how about we go from $33.66 and we take you down to $27.02 a month, right? Now, instead of saving, what is that, $13.40, we save $6.64. We cut that in half. And we do that because now we're going to apply a little bit more money towards the principal. You're still saving money, same loan amount, same interest rate. We got a 30-year term, so we went backwards on paper. So we're going to go backwards on paper, but now since you're spending an additional $664 towards the principal, half of what was going towards the credit cards into oblivion, now instead of paying this deal off in 24 years, Mr. Johnny, you're going to pay it off in 16 and a half years. So not only did you not go backwards, you went down in years. So you had it in 24 years. Now it's going to be paid off in 16 and a half years. Now, that has got to be a much better deal than what he's got going on right now. And what I want to do is, let's focus down here in this column right here. Currently, his loan, he's going to spend $208,000 in total interest with 30 years. Well, this is what's left. So in the next 24 years, he's going to spend $208,000. All right. If we were to do the 30-year, just a regular, we dropped his interest rate. Yeah. He's going to spend $156,000. On the 25-year, $127,000. If Mr. Johnny gets real smart and listens to his loan officer and allow us to structure this loan to where it's going to be in his best interest, and we're just going to reroute those savings to paying down the mortgage, he's going to spend $80,000 in interest. Now, just to show you guys that we didn't just pull these credit card payments out of the air, we're going to go over to bank rate right here. Minimum credit card payments. We gave him $25,000 with a minimum payment of 4%. That equals $1,000 a month in payments, which is how we came to that number. But if you make these minimum payments, you will spend on $25,000, and that's if you got a rate of 15%, which is probably not that low of an interest rate. Most of them I've seen is 19.9. I've seen some 29.9. But regardless of whatever that rate is, this is a good interest rate at 15%. I know some of you guys got 0%, but you just keep kicking that can down the road and moving it. At some point, it's got to be paid off. But with a 15% interest rate, which is an extremely awesome interest rate on a credit card, you are sitting at $36,000 in total payouts. And it's going to take you 12 years to make it up. Over here, if you do it our way, or the smart way to do it, use this newfound equity that's got your property taxes going up. Use this equity, apply half those savings, or whatever amount of those savings that you want to. You don't even have to. You can just use those savings and stick $1,100 in your checking account, or buy whatever stock that you want. Do something with that money. But the smart thing to do is to pay this house off in 16.4 years. You're still saving money per month. I mean, $664 a month is $8,000 a year in savings. Let's pull up our calculator. Times 12. What is that? 79.68. The math is still somewhat good. All right, so that's almost $8,000 a year in savings, and that's with you paying this house off. So keep in mind, I don't want to harp on this, but if you know somebody, you're watching this video, you know someone that owns a home and their value has gone up. If you're watching this and you're looking at it and you're saying, hey, the value of my house has gone up, 9 times out of 10, the value on your neighbor's house has gone up. Share this video with them. Share this video with any past clients. If you're a real estate agent, you're watching this, family members, even the neighbor next door that you hate because the dog barks all night. Share this video with them to help everyone get in a much better financial situation. They may not have credit cards. It may be a pool loan they may have. They may have took out a home equity line of credit a while back and never paid it off, and now it's just sitting there. Share this video so people can see and be educated on how to use a home equity loan to put yourself in a much better situation, especially if your value has skyrocketed and your property taxes are going up. So you may as well get something out of the deal. But hey, I don't want to harp on this too long. My name is Mike Price. I'm president of LTI Mortgage. If you want to apply, we got the website right down here at the bottom, ltimortgage.com. Hit the apply online button right there at the top. Select my name or one of the loan officers' name. We can definitely get you taken care of. Let me know what we can get done for you. My direct line, 214-915-2016. If you have any questions, feel free to reach out. Look forward to taking care of you soon.